Hey everyone, how's it going? We just got the closing bell for I guess it's Wednesday. Yep, Wednesday, August 21st. We are expecting mostly a chop sideways type of day, nothing too exciting, and that's actually what we got. So the S&P 500 up just 0.36%. You can see that we did have a green bar on the day, and we did have quite a range on the day. So our expectations of volatility, but really chopping sideways, those really came true. We had the FOMC minutes come out. We had that unemployment report that got revised down to about 800,000. But the market was kind of prepared because of the report that said maybe we might miss by a million. So there was volatility, but it didn't turn out to be directional. So what we want to see here is let's take a look at our VIX. We did go up a tiny bit. So let's see if VIX came down, and the answer is no. The VIX is still at 16.27, and it was really just is elevated from yesterday, even though the market is higher. So that's not really good news. We have heightened volatility, increasing uncertainty, even though we have the market moving up a little bit. So really, it's really shaping out to be that this market is going to really wait for Jackson Hole before making any decisions. And really, these are just retail trading. You can see how low that trading volume is today, just very, very, very low. So institutions are really not playing at the moment. They're really just waiting for that Jackson Hole meeting and the results of the meeting, the press conference after the meeting. So QQQ up a little bit, 0.48%. SMH still struggling. It is up 1.04%, but really it is getting capped out by that MA50. So a lot is going to depend. The market will most likely move quite a bit after Jackson Hole because that is there's a lot of things here that look like they want to move. They're just getting pinned down by the uncertainty of the Jackson Hole meeting. So it looks pretty good that we will get a direction, not just chop into September 18th. But until we actually get that Jackson Hole event, then it's really hard to say for certain. Let's take a look actually, I want to see how our Fed Watch tool is looking. I want to see if it swung back over. And it did. Okay, it's still not at past 50% like it was a little bit ago, sometime last week, but still it's swinging in this direction. So apparently people liked what they saw in the FOMC minutes, and they did say that the majority of participants did indicate that if data kept on moving in that trajectory, then it would be appropriate to start cutting rates. So that is a bit of a confirmation, I guess, but it really is data dependent. We really do need to see that data come in even better, and in order for us to really get that cut in September. So basically now all that's left to do, this is probably going to be pretty short, is just take a look at the sectors and see if it is giving us any different of a picture than we had yesterday, and also maybe look at momentum levels a tiny bit. So I'll start with the momentum levels. And if we look over here at our performance, it is still looking very good. The energy is really breaking down. Energy is not looking good at all, but everything else is looking solid. So we can take a look at the energy sector, see what's going on over there. But before we'll save that for last. So if I go and look at my 90-day highs, we're now at 293. We're approaching that 300 level, and my 90-day low is at 11. So this market, like I said, does want to keep on moving higher, does keep on creeping higher. But what's interesting is that even though we're gaining momentum to the upside, the amount that it's moving is really limited. So we may hit 400 or more on that 90-day highs, but still just be limited by this previous all-time high. Or maybe we'll get there a tiny bit higher. And that's really is a reflection of what I was saying earlier in the week, where it's kind of unusual to hit a all-time high without tech and consumer discretionary leading. And we're definitely, maybe on a very short-term basis, we're leading, but definitely not on a medium or longer term basis. So if we look at our sectors, just from a general standpoint, we can see that, okay, fine, SMH is up here, but then it's silver, gold, home builders, utilities, and industrials. That's definitely not the makeup that you would normally see when you're approaching all-time highs, which means that even though maybe we will hit the all-time high, it's really not that healthy and it wouldn't be sustainable. We wouldn't just keep on making all-time highs unless tech really starts to catch up and discretionary really start to catch up. And so far, we're not seeing that, but let's see what happened today. Home builders, retail, discretionary. Okay, that's some good news, but where's tech? Tech is middle of the road. Where's SMH? I don't even see SMH. Oh, it's over here. Okay, SMH is okay, not great, but tech is just in the middle. So even though it looks like we may be floating higher, I'm not going to really expect that we can make significant new all-time highs unless we really start tech performing. So if we look at XLK, XLK is just getting topped out. Remember, we wanted to get above this level right here before we got comfortable with it. SMH, we wanted this right here was 265, I think was, yeah, 265. We really need to have these sectors just keep on moving up a little bit more before we're really comfortable saying that we could be full on bull. Right now, we're just leaning a tiny bit bullish. We neutralize ourselves because of Jackson Hole. But before that, we were leaning slightly bullish. But again, we can't be fully bullish until we get an alignment of the sectors, because anything, even if we do manage to get to all-time highs, which would still be surprising if we didn't have tech and consumer discretionary leading the way. But if we did manage to get there somehow, we still wouldn't. Then at that point, I would be fading the market because it's just not realistic. It's not possible for a market to keep on making all-time highs without the riskiest sectors leading. And when we look at IWM, there's still a lot for it to play catch up on. So let's take a quick look at XLE, and then that'll be it for today. So XLE, you can see that we broke this downtrend, but then all we did was chop sideways. And so what we're doing now is just chopping sideways. If we get weakness tomorrow and we break this MA 200 or this purple line, I don't know when we drew it, but we drew it. That purple line is at 88.50. If we break it down, if we break down below that, then this market or the energy market is not going to look very good at all. And we would start to look for some shorts in XLE. Now is not quite the time yet, but we're getting there. We're getting pretty close. We could have a little bit of fake out like we did this time where it broke below it, but then it recovered. But second time, yeah, we could do it again and then make this kind of double bottom. But this choppy sideways action is not making it, it's not giving us confidence in the energy market. So we could break down. If we break down, then we will at the very least look for some temporary short-term shorts, if not some longer ones. I do remember seeing like let's see, CVX. CVX, yeah, that's not looking very good. Was it OKE? No, not OKE. OKE is not an energy stock. VLO, Valero. Yeah, it's just they're all looking kind of like this, like they broke below that MA 200. Just as a whole on the sector, it hasn't quite broken it yet. So once the entire sector goes, some of these ones that already broke below the MA 200, those would become good candidates for shorts. So again, not really ready to do it yet, and maybe won't even be ready to do it until after Jackson Hole, but we will be looking very carefully and seeing if this does actually break below the MA 200. So that's going to be it for today. Not a whole lot to talk about because there's no one participating in the markets. It's all retail guys, and the markets are really waiting for Jackson Hole. So we're going to wait for Jackson Hole as well. Okay, guys, have a wonderful rest of your day, and I will see you in the morning.